We got some big news for supermicrocomputer stock investors as the company reported preliminary results for its recently completed quarter. I'll go over what the company's sales, profits, and forecast was for the upcoming quarter and the upcoming year. I'll also address the question marks surrounding Supermicrocomputer and its financial statements. So let's get into the results.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, Supermicrocomputer reported net sales between 5.6 billion and 5.7 billion for the most recently completed quarter. That would be 54% growth at the midpoint. The reason why Supermicrocomputer is continuing to report preliminary results is because they themselves are not sure of the financial figures, of the way they're reporting their financial figures, and if they're going to need to restate these figures or what they're going to have to do to meet the requirements of the generally accepted accounting principles framework in the United States. The company said that their gross margins will be somewhere around 11.8%, and that would be an improvement from the same quarter last year. Supermicrocomputer has notoriously operated on very thin margins, so a gross margin of 11.8% would be on the higher end of where this company has reported results in recent years. The net income per share of 51 cents at the midpoint would be flat, so zero growth in profitability, even though sales increased by 54%. So that's a question mark there. How is earnings per share not rising when revenue is rising by 54% and your net income is remaining flat? The company went on to say that they expect to report that as of December 31st, 2024, they will have roughly $1.4 billion in cash and total debt of approximately $1.9 billion, with bank debt comprising of 0.2 billion and convertible notes of approximately 1.7 billion. This is especially important for Supermicrocomputer because the company has been reporting negative cash flow from operations, and I've talked about this in several other videos, so I'll briefly touch on it here. When a business like Supermicrocomputer, which sells primarily hardware products, is experiencing rapid growth like Supermicrocomputer is, they experience a timing issue with cash flow. They're paying a lot of money to get this inventory, to get it ready to sell. And then when they sell that inventory, they usually sell it on an accounts receivable basis, so they don't get the cash immediately. And so that timing difference between when they're paying their suppliers for the materials and then when they're receiving cash from their customers, that timing difference has created a huge negative in the company's cash flow from operations. Under normal circumstances, this wouldn't be an issue. But given that Supermicrocomputer's financial statements are under question, this becomes a bigger risk. So that's just something to keep an eye out for with Supermicrocomputer. They went on to say that they anticipate the transition to AI technology will result in growth for the business. They're forecasting revenue in the range of 23.5 to 25 billion for 2025 and 40 billion for 2026. So the company expects this rapid growth to continue, and I would agree with their forecast in terms of growth, because this is the biggest area of spending for AI. It's in the data centers optimized for AI, and these next generation AI data centers are more hungry for liquid cooling instead of air cooled, and that's where Supermicrocomputer specializes in liquid cooling of these data centers. And so they're in an excellent position to capitalize on this trend if they could just stop fumbling on the financial statements and the quality of financial statements and the questionability of their financial statements. The business itself is absolutely booming. So it's unfortunate that they're experiencing these difficulties with the financial statements in an otherwise booming business category. For the outlook, they say net sales in the range of $5.5 billion at the midpoint for the upcoming quarter, which is going to end on March 31st. and earnings per share between 36 cents and 53 cents. For the full year, the company is updating their revenue guidance, and they previously said they were going to deliver $28 billion in revenue for 2025. They're now lowering that target to a range between 23.5 to $25 billion. That's interesting to me as well because it's not like the market for AI has diminished. So I'm curious if this decrease in forecast is a result of some of the buyers of Supermicro's products becoming concerned about the company's position and shifting over to other suppliers, or if this is Supermicro Computer taking a more conservative stance in the way it reports revenue. And so now this new updated revenue outlook is a result of that now more conservative stance in reporting revenue and revenue growth because management teams have some leeway in the way they report financial statements. It's not black and white, right or wrong. It's a framework for reporting financial statements. The generally accepted accounting principles is a framework that allows management teams of companies to have some flexibility in how they report financial statements. And so that's why this situation I often allude to as being a question mark, not really something that I say is bad or good. It's just a question mark because they may need to restate their financials or change the way they report their statements in a way that lowers their revenue and lowers their profit outlook and lowers their cash flow. And so all of that, it's difficult for an analyst like me to evaluate a company when I don't have full confidence in the financials that they're reporting. Still, when I conducted a discounted cash flow valuation analysis for Supermicro Computer to find the intrinsic value per share, I found the stock to be undervalued if all of the numbers are correct and if the numbers do not need to be adjusted lower. I found the intrinsic value per share at $109 and the current market price is $40.85. So if these numbers and these estimates that I used to make this valuation are correct and they don't need to be revised, then Supermicro Computer could be an undervalued AI stock for long-term investors to consider. However, right now, given all the question marks, I wouldn't recommend adding this stock to your portfolio until there is more clarity into the company's reporting standards. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.